In June 2020, a company called Nikola Corporation was worth more than Ford Motor Company. Ford had been building cars for over 100 years. It had factories on multiple continents, a workforce of nearly 200,000 people, and annual revenues approaching $160 billion. Nikola had never delivered a single commercial vehicle to a single customer. It had no functioning factory. It had no revenue. What it had was a stock market valuation of approximately $34 billion. A charismatic founder making promises on television, and a promotional video showing one of its hydrogen-powered semi-trucks driving smoothly down an open highway. The truck in that video, as investigators would later determine, had no working drivetrain. The production team had towed it to the top of a hill and filmed it rolling downhill under gravity. The entire valuation of $34 billion? More than Ford? More than a century-old industrial institution with hundreds of billions in productive assets? Rested in significant part on footage of a truck rolling down a slope. Trevor Milton did not arrive at Nikola through engineering or science. He was a salesman. He had grown up in Utah, dropped out of college, and spent his early career in sales roles before founding a compressed natural gas fueling infrastructure business in 2012 that sold in 2014 for a reported $8 million. Milton used the proceeds to found what would become Nikola Motor Company in 2015, naming the company after Nikola Tesla, the same inventor whose name Elon Musk's electric vehicle company had already adopted. The choice was not coincidental. Milton understood that in the emerging clean energy vehicle market, the Tesla association carried specific connotations: technological visionary, clean energy pioneer, the future of transportation. The name Nikola positioned the company, from its first day, in deliberate proximity to those connotations without having built anything that warranted them. The product concept Milton pitched to early investors was a hydrogen fuel cell semi-truck, a Class 8 commercial freight vehicle that would use hydrogen to generate electricity, producing only water vapor as emission. The concept was genuine in the sense that hydrogen fuel cell technology is real, and that commercial freight faces the most significant technical challenges for battery electric alternatives. A hydrogen-powered semi-truck matching the range of diesel while producing zero harmful emissions would be genuinely valuable. The concept was also convenient in the sense that it was complex enough that evaluating whether the technology actually worked required specialized knowledge that most investors, journalists, and potential partners did not have. Milton had identified a product category where the gap between a compelling presentation and a functioning prototype could be maintained for years without triggering the technical due diligence that would have immediately exposed it. The fundraising strategy Milton employed was built on a specific mechanism: generate enough institutional credibility through announcements, presentations, and visual demonstrations that new investors would rely on the implicit endorsement of previous investors rather than conducting independent technical verification. Each round of investment, each partnership announcement, each media appearance made the next round easier to obtain because previous validation appeared to reduce the need for independent evaluation. By the time Nikola had raised several $100 million from sophisticated institutional investors, the company's apparent validation was so extensive that questioning its fundamental technical credibility seemed contrarian rather than prudent. The promotional demonstrations that Nikola produced constitute the core of the fraud that regulators and prosecutors later documented. The Nikola One reveal event in December 2016 presented what appeared to be a functional prototype, a dramatically lit vehicle unveiled in a presentation to investors and media. The vehicle did not move under its own power. Milton described technical capabilities the vehicle did not possess. The Nikola 2 prototype, presented in 2018, was described as having a working hydrogen fuel cell system. It did not. The promotional video showing the Nikola One driving on an open highway, which became central to the SEC investigation, was filmed by towing the truck to a high point on a Utah road and filming it coasting downhill. Milton later claimed he had said the truck was in motion, not that it was driving under its own power. The distinction he drew was not one that a reasonable investor watching promotional material for a transportation company would have considered meaningful. The truck appeared to be driving. It was not driving. Investors who made decisions based on that appearance were misled. The General Motors partnership announced in September 2020 appeared briefly to validate everything Milton had been promising. GM agreed to take an 11% stake in Nikola and to manufacture the Nikola Badger pickup truck. The deal valued Nikola at approximately $11 billion and gave the company manufacturing credibility it could never have established independently. For investors who had been waiting for external confirmation that Nikola was real, the GM announcement was the confirmation they sought. The stock rose sharply. 2 weeks after the GM deal was announced, Hindenburg Research published a 67-page report titled Nikola: How to Parlay, an ocean of lies into a partnership with the largest auto OEM in America. The report documented the rolling truck video and the circumstances of its production. It cataloged claims Milton had made about proprietary battery cells, hydrogen production capabilities, and manufacturing progress, comparing each against available evidence and consistently finding that the claims could not be substantiated. It quoted former employees describing a culture in which technical claims were made for marketing purposes without engineering basis. Hindenburg had a short position in Nikola's stock, which it disclosed prominently. The conflict of interest was real. The specific factual claims in the report were also, as subsequent investigations confirmed, largely accurate. Milton's initial response was aggressive. Social media attacks on Hindenburg's credibility and characterizations of the report as a manipulative short-selling attack. Within days, however, the substantiation problem became undeniable. The SEC and Department of Justice opened investigations. GM began conducting its own due diligence. Milton stepped down as executive chairman on September 20th, 2020, 11 days after the Hindenburg report was published. The speed of the departure communicated rather more than the press release language suggested. The GM partnership was renegotiated significantly following Milton's departure. GM did not ultimately receive equity in Nikola. The Nikola Badger pickup truck program was canceled. The commercial relationship was substantially reduced from what the September announcement had described. The renegotiation confirmed in commercial terms what the Hindenburg report had alleged, that the basis on which the original deal was announced did not accurately represent what the two companies had agreed to or the underlying technical capabilities Nikola had represented. Trevor Milton was indicted by the Department of Justice in July 2021 on 4 counts of fraud. The indictment described deliberate deception across multiple years, false claims about proprietary hydrogen production technology, false claims about manufacturing progress, false claims about partnerships and customer orders, and the rolling truck video. Milton testified in his own defense at trial, presenting himself as an entrepreneur whose enthusiastic statements were the normal optimism of a founder rather than deliberate fraud. The jury was not persuaded. On October 14, 2022, Milton was found guilty on 3 counts, 2 counts of securities fraud, and 1 count of wire fraud. He was sentenced in December 2023 to 4 years in federal prison. The Nikola Corporation itself continued to operate in a diminished form under new management. The company shifted its product focus toward battery electric trucks, releasing the Nikola Tre developed with the German company Iveco. The Tre was a real vehicle with actual engineering behind it, representing a genuine if modest product capability the company had not possessed during the Milton years. The company's stock, which had reached approximately $66 per share during the peak of Milton's public credibility, traded in single digits for most of the period following his departure. The Nikola story sits at the intersection of 2 phenomena that characterized its peak years. The first was genuine and rational excitement about the electrification of transportation, which created conditions in which investors were motivated to find and back the companies that would build the clean energy future. The second was the SPACs boom, special purpose acquisition companies as a vehicle for taking companies public. which substantially reduced the disclosure requirements and institutional due diligence that traditional IPO pathways required. Nikola went public in June 2020 through a merger with a SPAC called Vecto IQ Acquisition Corporation. The SPAC structure meant Nikola reached public markets with significantly less scrutiny than a conventional IPO required. In an environment where investor appetite for clean energy exposure was at its highest, and where competitive pressure to be early to the next Tesla was overriding the impulse to verify carefully. Milton understood both phenomena and constructed a company designed to exploit both simultaneously. The comparison to Theranos is instructive and widely made. Both companies operated in sectors where technical complexity created natural barriers to independent evaluation. Both founders made claims that significantly exceeded what the company's technology could deliver. Both used prestigious partners and investors as validation that reduced perceived need for independent due diligence. Both ended with criminal convictions. What the Nikola story adds to the conversation about corporate fraud is a specific lesson about the interaction between genuine technological optimism and sophisticated market deception. The clean energy transition is real. The need for hydrogen commercial freight solutions is real. But genuine optimism about a sector creates conditions in which fraudulent actors can construct credible-appearing companies without building the underlying technology, because investors are motivated by the genuine opportunity to suspend the skepticism that would otherwise expose the fraud. The specific environment that the clean energy transition creates for this kind of deception did not disappear with Trevor Milton's conviction. It is the permanent condition of any emerging technology sector where the gap between what is possible in principle and what has been built in practice is large, and where distinguishing between a genuine pioneer and a sophisticated fraudster requires expertise that most market participants do not possess. If you want to understand which companies today are operating in sectors where the same dynamic is present, where genuine technological optimism is creating cover for claims the underlying engineering does not support, that is exactly what I track in my newsletter: distressed debt, leveraged finance, and the signals that separate real technology companies from sophisticated fictions. The link is in the description. And if you want to see what happens when another founder mistakes the market's desire for a product with the existence of one, click the videos above.